In the spirit of continuing to engage our original investor base, welcome our new investors from the public markets, and improve our communication with our friends on Wall Street, we're going to devote part of this town hall to reviewing some of the financial highlights from our recently filed quarterly report on Form 10-Q for the first quarter of 2023, as well as share some current events that may be of interest to our stockholders and potential investors. This town hall format is intended to provide an informal forum for our audience to ask questions from Wall Street to Main Street, from Silicon Valley to Washington, D.C. If we're going to achieve our long-term mission of making the U.S. the safest country in the world, we're going to need the entire country engaged, and today is part of it. Of course, any and all figures presented today in this presentation should be read in the full context of the company's recent regulatory filings and risk factors, and those are available for you at ir.knightscope.com. Now let's get to the numbers. Last year in 2022, we recorded $5.6 million in aggregate revenue, and that's from both service and product for the year, reflecting an over 60% growth rate from the prior year. Additionally, at the end of 2022, we built up a backlog of approximately $3.9 million in new orders, and by the 19th of March of 2023, as reported in our 2022 10-K, that number had increased significantly to $5.2 million, which is almost the same amount of the revenue for the entirety of 2022. The significant top line and backlog increases are attributed to our acquisition of Case Emergency Systems during the fourth quarter of 2022. With respect to the first quarter of 23, there are three key points. First, I am pleased to report that for the first quarter of 2023, we recorded approximately $2.9 million in revenue over the first 3 months of the year, which is an over 300% improvement over the first quarter of 2022. This included a year-over-year increase in service revenue of approximately 85%. Service revenue includes our ASR machine as a service revenue, as well as maintenance and support revenue related to the blue light towers and call boxes, which is the primary driver of the significant increase as compared to the first quarter of 2022. Product revenue relates to emergency communication device sales and contributed approximately $1.1 million in the first quarter of 23. And despite the ongoing drag from supply chain issues, this reflects an annualized revenue run rate of approximately $11 million. Second, with our focus on top-line revenue growth and cost reductions taking effect during the first quarter, we had a significant positive swing from a gross loss in first quarter of 2022 of $549,000 to a gross loss during first quarter of 2023 of $213,000, a nearly $336,000 improvement. The increase in gross margins is primarily attributable to positive margins generated by our product sales. On a percentage basis, gross margins moved from a negative 58% gross margin to a negative 7% gross margin, and our plans are in place to continue to improve our service and product margins as we scale up. Comparing first quarter of 2022 to first quarter of 2023 on a per share basis, we improved significantly from a 30-cent loss per common share to a 6-cent loss. Last year, we noted our plan was to achieve profitability in the next 24 months, and we have made positive movements in that direction. We plan to continue growing the company, and we believe our sales pipeline is strong, and increasing sales will allow us to grow, drive economies of scale, and better leverage our fixed cost base. Third, during the first quarter of 2023, despite supply chain challenges, we're able to reduce our backlog of new orders from its peak of $5.2 million reported in our 2022 10-K down to $4.7 million in about 30 days. However, given the ongoing positive demand for our technologies, our multi-million-dollar backlog of orders is continuing to increase. We are therefore focused on transitioning our production strategy from a work cell environment, which is appropriate for smaller volumes, to a more traditional assembly line process, set up to accommodate a larger volume of units with new processes to optimize throughput for the manufacturing of our autonomous security robots here in Silicon Valley. Our cash on hand at the end of 2022 was $4.8 million, and our cash and cash equivalents at the end of first quarter 23 was approximately $2.4 million. We seek to improve our cash position through a 7-fold plan, which is underway and includes the following. Number 1, continuing to grow our top-line revenue with new service contracts and product sales. Number 2, leveraging our financing partnerships with Dimension Funding and Balboa Capital to fund new orders upfront, improving our cash flow. Number 3, accelerating delivery of our backlog of orders. Number 4, continuing to use our at-the-market program managed by H.C. Wainwright. Number 5, realizing cost savings from the cost cuts implemented in January of 23. Number 6, reducing our variable costs related to our ASRs, such as telecommunications, service, and cloud costs to improve our margins. And number 7, exploring a possible non-dilutive debt offering to continue to fuel our growth. As a follow-on to the 10 Town Hall Marathon we conducted last month, we'll now transition to the live portion of the Town Hall for questions from our longtime investors, new retail investors, institutions, and analysts. Thank you.